morning opening down a little bit in the open in Asia, and it continues through the week to being a fairly mixed bag after the initial sort of gyrations after the OPEC decision last week. Let's kick off with our regular Thursday morning commentator, Dr. Carol Knackley, CEO of Crystal Energy. Carol, it seems that in some ways a lot of a lot of uncertainty has emerged in the aftermath of the OPEC decision. Third time in a row, they've kind of caught the market by surprise. In some ways, it strikes me that this is part of the struggle that we will see for all financial asset classes, if you like, coming out of the COVID pandemic forest. It will be a difficult transition.
Good morning, Sean. Good morning, everyone. Well, I mean, definitely we're still, one thing I have to say that I was surprised when I saw the market going a bit down yesterday. But then I checked at one of the main news item that probably sent some shivers down the spine of some investors was a statement by the IATA, the head of the IATA, about the international travel, where he gave a figure I did not expect that, where he said that 9 out of 10 commercial flights is still grounded. That's a massive figure because I thought that traveling was getting better. And actually, he said that actually, instead of going in the right direction, traveling is going in the wrong direction. So he kind of contradicted the overall impression that we had. So that came as one of the forces that acted, that put a downward pressure on prices. But at the same time, we shouldn't forget that we should look at the outlook for the rest of the year. And I think this is what OPEC Plus has been betting on, the improvement in demand for the coming few months, not just actually what has been happening today compared, for example, to last year. The other thing that is interesting is the IMF World Bank spring meeting. And so far, we had more positive news than negative news. The IMF, for example, upgraded its economic forecast for almost all countries. I was surprised to see that they even did that for the Eurozone area, because here, as you know, they are still fighting with the third wave of the coronavirus, and yet they had a upward revision for the economic outlook of the Eurozone. So on balance, I think we will continue to see those movements, though I have to say they are less volatile than what we saw last month, partly because we now have clarity about OPEC Plus schedule for the next 3 months.
Dr. Aldo Flores Quiroga, former Deputy Secretary of Energy for Hydrocarbons at Mexico's Ministry of Energy. Welcome back, Aldo. There's obviously all of this very positive news that is the overarching sentiment, one would think. But yet there's still the likes of the Fed minutes, which came out yesterday from the recent meeting, showing the Fed's continued concern for the recovery and their determination to maintain an easy and supportive policy as far into the future as one can see. I mean, ultimately, how do these two things coexist? Record growth predicted for the US economy above 6%, and no, we must keep supporting it with free money because it's really weak. I mean, these are confusing signals, and in the confusing signals, there's a paralyzed oil market.
Well, I'll say that the record growth is what's conditioning the expectation, right? It's we are seeing that this type of macroeconomic policy support will be able to also support this type of economic growth. But to me, really, where we are is, I mean, the lesson of all this news is that we're still not out of the woods. You know, the market is behaving in a very volatile way to very small changes in the news. So on the one hand, we have what appears to be a recovering US economy, and that is showing up in many indicators. But then we have, and that also means China, by the way, but then we have this possible slowdown in Europe, given the COVID situation, possibly in India. We don't see much more dynamic growth in South America. So this is now a North America, part of Asia Pacific story in terms of demand growth, but you have that downside on the other part of the world.
And in terms on that of supply, downside issue, just to pick up on it, the sort of uncertainty in South America, we're seeing in recent days the Brazil infection rates climbing again to very concerning levels, and also Brazil's situation spreading now into Uruguay and other countries in South America that were previously doing pretty well through the COVID pandemic. How concerning, how serious do you think is that for South America, obviously?
For South America, it's definitely concerning. And but I'm thinking of the combination of what this means. If you have Brazil and India and Europe in that situation, then the demand push will not be as strong as we would expect toward the end of the year, right? But it's hard to reach definite conclusions given how much news, as I've been saying, has been changing for so long. And in terms of supply growth, we have OPEC. Well, with the new agreement, the possibility of Iran coming back stronger, plus Libya, plus the shale patch also maybe making a comeback. So it's not so clear where the direction will be, at least not for me this week.
Andy Lavin, COO of Sahara Energy Resources. Andy, the market in Pacific today, at least as sort of market watchers observing, is coming off, dropping out of Asia this morning because of the inventory reports yesterday signaling a big climb in gasoline inventories after although a draw in crude, the build in gasoline seemed to be the trigger that sort of pushed, at least for now, the market to go softer in Asia. Your thoughts generally on the inventory and the outlook for gasoline demand?
So I think there is, so Aldo and Carol have kind of commented on it a bit earlier. There is this gap in terms of what historically has been the way the market has moved and actually what we're seeing now. So we're seeing very different rates of recovery in different parts of the market. And if you ignore it being the oil industry, what you've got is a very simple marketing business. So we manufacture and we sell things. And guess what? Depending upon how quickly the sales go, you can push product through manufacturing too fast or too slow. And that's all we're seeing at the moment, okay? So essentially, it didn't draw as much as we expected it to, but we'd put more product in, more crude into the refineries. So crude went down and product stocks went up. That's just kind of simple supply and demand. The problem is that historically, we've interpreted that as a market signal, and it's not. We've just got a manufacturing business. We don't really know how much we need. We have to plan ahead, and we got it slightly wrong. So
well, with the gasoline build, Andy, obviously one would expect that to an extent ahead of the big demand draw for the summer driving season in the US.
So what that's basically saying is that the gasoline demand is not picking up as quickly as we'd expected. We had expected it, therefore we'd started producing gasoline. It's as simple as that. Now, then the question becomes, well, is this actually a sign that the gasoline driving season isn't going to be as strong as we hoped it would be? Maybe that's too early, really. And I think the comment about travel is really interesting one. And I think it shows how difficult it is going to be for us to come out of this pandemic and actually understand the path we're going down. So we've been trying to go back to the UK for about a month now, not physically trying, but thinking, how do we do it? Because we don't really want to go into 10 days sitting in a Holiday Inn with just walking around a car park. But you can't go by countries and spend 10 days there because you don't know whether they're going to be on the red list, and it's going to end up with doing quarantine in more than 2 locations. It's just this uncertainty is holding a lot of people back, I think.
Carol, another story we have on the digest this morning, and it's again sort of the same narrative of stories as we come out of this pandemic, or at least emerge alongside it. The global middle class in a historic setback is the Bloomberg headline, currently estimating about 150 million people globally dropped out of what's defined as the middle class. A signal nonetheless that these are some of the data points, some of the realities as we emerge from this subsidized period of government stimulus and all of these other things that have kept a lot of ghost jobs alive, a lot of ghost companies alive, that the cold light of day, these are some of the realities we will start to see, and the ramifications of them will have to be considered.
Definitely, Sean. I think the more we progress towards the end of the pandemic, the more the scarring is going to become more visible. Things that we didn't really think about before because, the economy was supported heavily by government support. So it kind of masked the fundamental problems that this pandemic has caused. It's not just about the virus, though I have to say earlier in my comments, I mentioned the optimistic outlook from the IMF. But actually, when you read through the detailed report, they talk about an exceptional uncertainty. And they say that all their forecasts and the economic outlook depends on the fate of the virus. And for me, the virus is still alive and kicking, if actually more accurately mutating. And another figure that is also mind-blowing is that the vaccination rate, and this to go back to the point that both Aldo and Andy mentioned about the uneven progress everywhere. So we have almost 80% of the vaccination administered in the world in a handful of countries. I think around 10 was the majority in the US and China. So we have this kind of uneven recovery, but also in terms of inequality, that is going to widen further down the line. It was already more pronounced before COVID-19. Remember, for example, when they tried to make, and this is relevant to our discussion today, when, for example, in France, they tried to make fossil fuel a little bit more expensive, then there were riots everywhere. The same thing in Latin America, the same thing in some parts of the Middle East and Iran, if I'm not mistaken. So it was already there, only to be amplified by COVID-19. And that actually, in my opinion, can act as a decelerator for the energy transition if governments decide to make fossil fuel further more expensive and continue to subsidize the renewable energy. So it has much broader implications than just on the economic recovery. It also has implications on the economic and climate agenda.
Aldo, one of the more interesting stories perhaps that still has to play out from the OPEC Plus meeting last week was the phone call that took place early in the day between the current U.S. Energy Secretary, the new one, Jennifer Granholm, who is the former governor of Michigan. She called the Saudi oil minister, Prince Abdulaziz, in the hours before the meeting. And there's been a lot of speculation what that call was about. Ultimately, the standard comment from the secretary was, I had a productive call with the minister from Saudi. It's about stable supplies and so forth. But my question to you is, are we seeing, do you think, a return to the standard US policy of previous administrations, which is please give us as much oil as you can at cheapest prices possible? What do you extrapolate from that engagement and the posture of the new administration?
I of course can't really speculate on that, but let me make the following point. When oil prices collapsed, no one in the U.S. administration, the Obama administration, was that happy. Well, I shouldn't say no one, but there was concern for what it meant to shale producers, given that so much of U.S. job growth had taken place had occurred in the shale patch and in the oil industry. So the way I read the news is that this is a call for not overshooting in either direction, just aiming more for a stable price, as opposed to going into pushing prices down I don't think that's
the
also
the FT has the FT headline that we have on the digest this morning kind of moves it a little bit further with the U.S. signaling it's still dependent on cheap oil from abroad. You know, there's a lot loaded in that headline in the sense that the U.S. foreign policy in recent years has been impacted by the so-called U.S. energy independence, the ability to sanction countries here and there because you had security of supply. Now, if that posture is changing, maybe that changes the U.S. foreign policy posture.
Could be, but again, I think the space for speculation could be huge.
Right.
I still believe that overall, there's this interest in, obviously not. I mean, too high a price will derail a recuperation, right? So that cannot be the solution either. We cannot
well, let's go. Maybe Andy, you're in less sensitive waters to comment on this, given we are in the week in which Iran and all of the countries of the JCPOA are in discussions in Vienna, and inevitably, you know, if you take this FT headline and you extrapolate that more oil is better because lower price and lower price is better for the U.S. economy. I mean, typically the U.S. never like to go into a summer driving season with gasoline prices in the $3 to $4 range. That is always seen as a major no-no. It's certainly in the U.S. interest, you would think, to do a deal with Iran and get more oil flowing. Your thoughts in general about the Iran talks?
So I think there are an enormous number of moving parts in this puzzle, and Iran is only one part of it. I think the new administration clearly believes that the old administration's approach to Iran was unhelpful, and therefore they would like to go back to something similar to what they had before, but probably with some extensions in terms of some of the levels of control. So a stronger agreement than was there before. But the problem that it creates is that it will bring more oil onto the market. And I think I want to come back to something that Cal said. Also, if you kind of read your headlines, I think we have to be careful that this K recovery, which is actually just a recognition that different parts of the world will recover at different rates, is not just parts of the world. If you look at the US, the fundamental reason I think why the Fed is looking to support longer is because they have K-shaped recovery. They have a lot of people that are not going to get out of this pandemic quickly. They also have a bunch of people who have made a lot of money during this pandemic and become even more rich. And I think the same is
they're
true.
In some ways grabbing a lot of the headlines.
Exactly. And I think that the same is true in terms of the US oil kind of policy. You know, if you're supportive of doing something with Iran, then oil prices are probably going to come down, but that means the guys in Texas aren't going to be happy, and they need some help. And it's almost, there's too many moving parts. And I would actually argue that the best thing that could happen for the US administration is gasoline prices are very expensive this summer, because it's not their fault. And they can turn around and say it's not their fault.
And they are trying to support a green transition agenda.
Exactly, right? So as long as it's somebody else's fault, the administration can kind of hide behind that. As soon as they start being proactive and pushing stuff, there will be people on all sides that are going to blame them. So I think Iran is going to come back very slowly, but we'll see it coming back more and more just in the gray area.
Aldo, one of the sort of comments regarding why OPEC did increase last week against the sort of general expectation, and not only made a decision to announce an increase, but also made a commitment to a 3-month rather than what had previously been a rolling 1-month scenario, is the fact that there was growing indicators that shale and the US production may be coming back, maybe starting to a position they were hedging and putting all the pieces in place for recovery in the US production. What's your sense on that, and what do you think is the outlook in the second half of this year for US shale to make some kind of recovery?
With this price level, I think shale will be starting to come back, and we can expect stronger output. And therein lies the difficult balancing act that OPEC is facing. They don't want to come back to higher levels of production very quickly because they really have to accommodate all these new players and keep the market stable. So I think it's still going to be a very difficult, as I said, a difficult balancing act in the coming months.
I mean, do you think in the context of what we've seen in recent months, the sort of increasing barrels coming out of Iran, generally secondary sources indicating about 1 million barrels a day, and also we've seen recent reports, even Venezuela increasing its exports, nothing like it used to be, but up to 700,000-800,000 barrels a day in recent months. And all of it seems to be going to China, that even though they are outside the OPEC plus agreement, they are OPEC countries. And so they have to be in some way accommodated, whether it be indirectly or directly.
Absolutely. Yeah. And that has been the practice inside OPEC anyway. Those that have been, for whatever reason, outside of the agreement or unable to continue producing at the level they were doing it, they have to be accommodated somehow. So that will become part of the discussion. Should it become a trend as opposed to a moment?
Well, it certainly seems that it is becoming. I mean, the Iranian one in particular has been a number of months now, and certainly one could say that's pretty consistent. Let's go to the room and give them a chance to comment on some of these issues we're talking about. And this again is about the Fed policy, this idea that we have to continue this supportive easing, if you like, monetary policy, even though all of the signals we've seen this week, the IMF, we saw earlier the World Bank predicting, forecasting massive growth numbers, but still this easing of Fed policy, monetary policy across the world. My question ultimately is the continuation of this soft policy on the monetary side bullish or bearish for oil prices? It's certainly, one would say, been bullish up till now. My question is that the gift that keeps on giving and that will continue to be bullish or bearish? Your choice, your thoughts. Welcome. What do you think of that? Carol, of course, the big equation is where you're sitting in Germany and Europe. We've seen the German stock market is racing ahead like the stock markets in the US, but yet the difference being Germany remains in lockdown to an extent where the US economy is wide open. What's the outlook, you think, generally speaking, for Europe now as we get closer, the big question of the summer travel tourism season?
I mean, things are started to look a little bit brighter in Europe because after the mess that they had with the vaccination rollout, I was looking at the numbers a few days ago in France, that things are picking up quite faster than what at the start of the year, for example. So in this respect, the outlook, I understand where the IMF was coming from in terms of having a positive outlook for the Eurozone in general, and also for countries, the largest economies in the region, such as Germany. And Germany, I think, its manufacturing sector is pretty strong. And when you have growth elsewhere in the world, and mind you, they are also directed towards the export market. So when there is growth outside the country, they will also benefit, even from the distribution of the vaccination, because they actually quite specialize in the production of the containers and the transportation material for the vaccination. So that adds to the positive outlook. But allow me just to go back one point to the question that you asked, Aldo, about shale. And I don't know why today, this morning, I'm in a data mood, although I'm not quite functional early in the morning. But another
maybe it's the hour time change. It's helping
probably
your data.
I know, and I think it's all the birds. It's all the birds background coming from you, Sean. And
yes.
I mean, I was looking at the Federal Reserve's Texas Federal Reserve Bank of Dallas, about their survey, and they found that the business activity index, which reflects overall sentiment and activity level, whether for production, exploration, for this year, reached record high in the 5 years history of the survey. And also this is going to be maintained for 2022. And here you have to remember that there is always a time lag of 4 to 5 months between prices, WTI prices, drilling rigs, and then production. Therefore, I stick to a point I said I've been saying since last year that we should expect a recovery in shale production at least starting by the end of this year. So that's my positive outlook for the remainder of the year, economically and also related to oil.
Andy, I just wanted to get your thoughts on the news this week out of the UAE, which was the start of the nuclear power plants in Abu Dhabi, which of course has been under construction for many years, but finally it seems they're now starting to contribute to the national grid. And that combined with the headline we have in the digest today, that China started more coal plants last year than the entire world retired in 2020. When I saw that stat, I thought, wow, that's a big challenge for the energy transition. But ultimately, the UAE building and getting its nuclear up and running, any dimensions for energy supply in the Gulf?
Short term, no. Long term, I've said before, I think the producers here have a fantastic opportunity to be in the driving seat around the energy transition. I think they've got the ability to separate between oil producing companies, and that's what they do well, and kind of the new energy companies like solar, like renewables, all that kind of stuff, including nuclear, and separating those out and making it a much more economic mix where people aren't trying to do everything for everybody, which is what I think we're going to see the Western world's doing.
Let's get the survey result up and see if there's anything of interest there. Bullish, so it will continue according to 2 to 1 in this room to be bullish. On that point, Aldo, we have the U.S. Latest infrastructure bill coming, and the gloves are starting to come off with the Joe Manchin, the senator from West Virginia, who is on the right side of the Democratic Party, saying that he wouldn't support some of the process. I'm just generally wondering your thoughts on the outlook for Joe Biden now in the US. You're sitting in Texas, his ability to get this and other stimulus-like bills through the Congress.
I still think it's a tough fight ahead because there's many questions to solve about the funding aspect of it. Let alone what it might mean for the overall deficit and perspectives on spending. The funding itself, the tax reform or the tax adjustments that this implies means that this is going to be a heated discussion.
On that tax point, Aldo, part of the new initiative is for the U.S. to go to try and secure a global tax rate, corporate tax rate, which is a huge, and my home country, Ireland, which has been very naughty on this front, facilitating all of the big multinationals to wash their big profits through Dublin. Your thoughts on that? Is that significant? Does it have legs? Would Mexico, and other countries be on board with that?
I think it will have legs if we see something like a core group at the OECD moving in that direction. But you have nailed it. Countries like Ireland, but it's not just Ireland. There's other developing countries that have found, in a debatable way, by the way, that having this type of tax code attracts more investment as opposed to an overall business environment as the key to attracting more investment is the way to go. But for them, it's going to be more difficult to accept this type of change. But if we have a critical mass of large countries doing that, maybe we can see that type of movement.
Carol, would you like to comment on that that outlook for that policy into Europe, into Germany?
Yeah, taxes is one of my favorite subject. But look, the issue of tax competition has been going on for a while, and the IMF has been trying to fight it for a long time with, I would say, very little success. Though today they want to seize the opportunity to encourage more countries to reform their corporate tax system. But it's easier said than done, Sean. You have to think of tax treaties. So even in the US, when the Biden administration said that they want to try to bring back more profits in terms of taxes to the US, that is not easy because they have to revisit lots of legal aspects, including the international tax treaties that they have with other countries. So it's not a new subject. It's something that has been going on for a while. However, we should expect higher taxes being imposed where it's possible for governments to recoup some of the spending that they have done during COVID. So that was something for me quite certain as soon as they announced all these generous fiscal stimulus packages to support the economy during the pandemic.
I mean, just to wrap up on that, we have this absurd situation in Ireland where, because of the Irish sort of managing of these tax loopholes as such, Apple was held was had a judgment against it from the European Union that it had not paid up to about, I think it's $12 billion in backdated tax that the Irish government had kind of waived, and that they had to pay it. And the Irish government joined Apple to appeal that decision, saying, no, we don't want this $12 billion of tax, even though our hospitals are collapsing and our schools need a serious investment. And now they're in the process of appealing that decision with that $12 billion of Apple money parked in an escrow account. So it is in the borderline of the absurd. And I think there might be legs on this, because Biden definitely has leverage over Ireland. And if he takes this point and is passionate about it, which he seems to be, it'll be interesting to see how he plays his Irish card. But that's for another day. The end of the week here in the Middle East. Thank you so much, Dr. Carol, Dr. Aldo, and Andy. You need a doctor before your name to come on this session. What's going on? You got to go back to school. Thanks, everybody. Have a great weekend, and we'll catch you on Sunday to have the week in review. All the best.
Thank you. Bye-bye.
Thank you, Sean.